Hi there traders, and welcome to the video blog for the 13th of April 2014. Hope it finds you in good spirits and April is proving to be a good trading month for you. Today I want to concentrate specifically on 3 or 4 trades because there's been some setups recently that have really brought everything that we've talked about on previous blogs and previous videos together in regards to some very high probability trading setups. So I want to go through those very specifically and just reinforce and reiterate everything that we've been working on over the last few months to show that it all does come together and can provide some very nice returns. So I'm going to kick off with the dollar Swiss. This was a setup from the setup was actually on the 4th of April, but that tied in with non-farm payrolls, so it was actually the following Sunday stroke Monday where the setup actually came to fruition. So what was it? What happened? And more importantly, why was it a great setup from a technical perspective? Well, firstly, let's zoom in to the actual bar that formed on that Friday, the Friday of non-farm payrolls. As we can see, beautiful high test bar there. Now, what caused that? Well, the results, the figures from the non-farm payrolls were actually negative. Figures came in lower than expected, so that created some dollar negativity. So the push up on the dollar Swiss that had happened through the majority of March was starting to now come to an end, and fundamentally that was strengthened by the fact that the employment figures out of America were poor. So this created that beautiful clue that was the case, the high test bar. Now, high test bars on their own are very powerful, but put together with other factors are even more powerful. Now, what was another factor that gave us an indication that the market wanted to reverse? Well, as we can see here, we've pushed up strongly from the lows at the start of March all the way to the back end of March, where we got a small pullback just here to create a higher low before then it thrust higher to create that high test bar on the Friday. So we can see here that we created a brand new high, but as I've suggested and shown to you many times before, divergence is a key element, a key clue that the market wants to reverse. The market has put in a new high on price, but a lower high on the stochastic, as we can see there, very clear, very obvious, in combination with that high test bar. So that was starting to strengthen the case even further for a short trade opportunity. Another factor there was that the market had become overextended. So here we can use our fib extension tool to see if the market had overextended itself. So we can see this peak here, and we can see this low here. So we can measure to see how much of this big push up, this phase 1 here, has overextended itself. So we take our fib tool, we go from that peak, we bring it down to the low, and as we can see here, the market is pulled down, thrust higher, and has gone 1.272 and slightly higher, probably to the 1.618. But really I'm looking for price to poke into this zone here between the 1.272 and the 2% to give us confidence that the market has overextended itself in combination with some other factors. So that gave us another strengthening clue that the market was overextended and was likely, no guarantees, but likely to reverse from that point. So that's a third factor coming together. Now, is there any resistance levels? That's what we're looking for. Well, the fib extension was one level of resistance, but can we find any more? That is the key element. So I know the Swiss had been in a pretty aggressive downtrend for many months, so we're looking for those big obvious strong trend lines. So I'm looking for those major peaks back in time. So we can see one here in September where the market really tanked. We can see another one around about November, another one in January where the market hit its head and started to push down. But just from a visual perspective, I can see a line coming from this September peak through the January peak and all the way to the April peak. So let's just draw that on and get the confirmation. So we start back in September and we bring it all the way down to the January point and bring it down to make sure that it doesn't have a closing price above this trend line. And as we can see there, we can then put that onto our chart. So Resistance hits its head, has a strong move down. Resistance hits its head, has a strong move down, and then comes all the way back up again. Another lovely level of resistance. So that's a trend line resistance, another clue, another factor that suggests that this is a really nice zone for a potential turn lower. So we can then look for another resistance. So we know we're big fans of horizontal resistance and support, so I can see here how this was support, this little level here. I can see how this was support, this little level here. I can see how this was resistance, this little level here, and resistance there. So we can actually draw it on and see if we can find a horizontal level where there's a few interactions. So as we can see there, lovely support becoming resistance. So that was a strong level there, becoming resistance here. Now granted, it's not the strongest horizontal level that I've ever seen, but in combination with the trend line, in combination with the fib extension, in combination with the price action, in combination with the stochastic divergence, I'm building a very, very powerful team, a case for a move short. So all we then needed to do, based on all of these clues, was have a little trap just underneath the low of Friday. If that trap was taken out, we're entered into the market, as we were on the Sunday/Monday, quite aggressively. Stop nicely tucked above that high test bar and the trend line resistance. A fantastic area to put your stop loss. The market triggers us in and starts to slide in combination with the overall dollar negativity that ran throughout the last week. So this trade is almost at 3%. Stops are at the 1% level, and a little bit of profit has been taken on the first trade if that's a principle that you adopt. So a wonderful trade. Again, it's just all it's doing is bringing back all those clues, all those factors that we've talked about for many months. So I really do hope that you were able to catch this market move. Euro dollar was just an opposite mirror of this, so you may have taken the euro trade long instead of the dollar Swiss short. The reason why I identified the dollar Swiss is that it had probably a couple more clues extra over the euro, so that made me go and take the Swiss over the euro, because taking both trades is essentially taking the same trade, so I'd rather take one or the other. And the thing that gave me the confidence to take the Swiss franc was the fact that it had a couple of extra clues that that gave me that added confidence, which is absolutely critical in trading, because when you have that confidence, then you are not only, one, do you take the trade, but two, you stick with it even if the trade's going against you. So that's the dollar Swiss. Euro dollar was a mirror image of it. A really nice trade based on a collection of factors all coming together to build a very strong case for you to then put your hard-earned money on that trade in the aim to get a positive reward to risk, which we're currently at. We're 3% up, which is a fantastic trade for a single trade. And if it carries on going, we've got really this level down here where it bottomed out before to watch, the 8,710 level. So that's a potential extra 50 pips, which is just shy of another 1%. So if we're able to squeeze 4% on this trade, that'd be absolutely fantastic. That's not to say it can't go further than this low, but that's a level where the market has bought back, so potentially it could do that again. But all we'll do is start to trail our stop. Every percent we go in our favour, we'll trail our stop another percent, as I've already talked about on previous videos. So great trade there. So that's dollar Swiss. Let's have a look at Aussie CAD. Was a trade that I really liked for many reasons. Slightly different to the dollar Swiss trade, but still a collection of clues. Just there. Let's just bring this back. Okay, so Aussie CAD, we can see very strong uptrend in this very clear channel, finding support off the bottom and finding resistance up off the top. We saw that we topped out around about the end of March with this big high test bar. Let's just bring that down. So we got this big high test bar towards the end of March where it topped out, and the market slowly but surely started to enter its phase 2. Now, we did have a level down here which we ideally wanted to see price come back to, but when a market is ultra bullish, you'll notice that the phase 2s or the pullbacks are very shallow, and the price just holds because the market wants it to carry on going higher. So as we saw this phase 2, we saw that it was very weak. Now it did come back to the 382, which is a very shallow retracement. So if we take our Fibonacci tool from this low here to where it topped out, we can see that it does come back to the 382, so it does qualify for a retracement. But the 382 is the shallowest of all retracements, which indicates a very bullish market, which, as we can see from looking at the chart over the last few months, it's very, very bullish. The Aussie has probably been one of the strongest currencies across the board, so thus the reason why any cross pairs, including the Aussie, have gone up strongly. Now, it's came all the way back. Now, you're probably thinking to yourself, well, where was the point to get in? Because there was a few false breaks here. Well, for me, it was when the market came into showing us hidden divergence. So we saw this top out. This is our market coming back down, and we're comparing really this low here to its previous one. So this is its previous low, just here. Now, if we come down on stochastic, that's where really this point here is where we start to get some hidden divergence. But the fact that it comes all the way back into oversold territory, this is the zone we really want to be looking in and around about here, because it's come all the way back into oversold territory. Lovely hidden divergence. We've got a higher low on price in comparison to its previous one, but we've got a much lower low on the stochastic. That's our hidden divergence there, indicating that the market's ready to resume its preceding trend, which in this case here is a strong uptrend. So we got some price action here. Now, I didn't really want to trade here because it was non-farm payroll, so I waited, and we actually got this on the Monday, the following Monday. We got this big seller bar, which is quite unusual. You're probably thinking to yourself, why would you want to buy when you're seeing a big seller bar? And that's an absolutely valid point, but it's actually an inside bar. The whole bar is contained within the whole of Friday's range. So even though it is a seller bar, it's still an inside bar, which is saying that the market is holding price up for some particular reason. Now, had it broken lower, no longer interested, I'd have waited for it to come back down to the support level. But the fact that after a big seller day, where it failed to break the low of Friday, it actually recovered and went back the other way. So that for me is a very, very powerful clue. Sellers have tried and failed, massively failed, not just a little bit, they've massively failed. So as the market came back up and broke the high of this inside bar, that's an ultra bullish confirmation. So the market broke here, triggered us in, stop underneath this zone here, and the market has rallied and is not massively up, but is at the 1% level, has gone 1%, so stops can be back to break even. Take a little bit of profit off the table if you so wish. If not, then we just wait for the next point, which is going to be the 2% level, which really, if it gets back up to the top of its channel, should be attainable. That's when we can lock in a little bit more profit. But for me, very, very bullish market, just purely waiting for an opportunity to get into the next leg up. The hidden divergence helped us with the timing. We left our trade until after non-farm payrolls, because that was quite a significant element that was going to have a strong knock-on effect on the US dollar, either for the good or the bad, depending on the actual outcome. But in this case here, it was negative dollar, which meant the Aussie rallied very, very strongly, stronger than the dollar CAD weakened, and the market carried on going up. So that's a nice trade there, showing us how the price action, the phase 2, with it being so weak, can actually give you confidence that the market is ultra bullish, and then just wait for your timing in terms of using some other factors to really, really help with that trade. So that's the Aussie CAD trade. Really, really nice trade. It's still open. Leave it to run and look for potential exits up at this top level at the resistance of the channel. Aussie CAD. And then finally, the other one I want to just have a quick look at is CAD Swiss. We've looked at this many times in the past, so it's one you should have really had on your radar for quite a while now. Now, it means being very, very patient for price to get to the tops and the bottoms of its channel. But for me, that is probably the nicest and the longest and the strongest channel out of all the currency pairs. Absolutely incredible. The behavior of this currency pair has been phenomenal. And so it's really about taking advantage of it, but waiting patiently for it to get to its extremities to take advantage of it. So it can become very, very frustrating, because you can look back in time and go, oh, there's been a wonderful amount of some fantastic trades, but when it's in the middle of its range, it's not a wonderful time to be trading it. So you have to sit on your hands and wait patiently. Now, it's worth, based on looking at the previous examples of where it tops out, it's absolutely worth waiting, because we're looking at some incredible moves. We're looking at 3-4% whenever it hits resistance or hits the 50 moving average. We're seeing a sharp turn. So we saw last week that price came back to this trend line here that's been there's been resistance for many months, all the way back to the, when was it? Around about September, November last year. So it stood the test of time, and it came all the way back. We saw price had quite strongly risen, but we did get a very subtle but still a cycle where it moved up, topped out here, came back down to form a higher low before it then thrust back up. So in a similar way to the dollar Swiss, we had the ability to see whether it was diverging. So we got, let's just zoom in on the price there. So we most certainly got a new high on price, just there, bang. So a higher high, but look at the stochastic like for like, very clear lower high. Absolutely massive divergence. There is a sign there that is giving you a clue that the market wants to reverse strongly. Now, the bar that hits into resistance isn't the greatest reversal bar. It's a very bullish bar still. Now, you could argue it's just above its 50% level, but for me, it's not the greatest high test bar. So for me, it wasn't a tradable price action bar. However, 2 days later, when we get a double inside bar, which is a very rare pattern, but a very powerful pattern, we got a double inside bar, which is just a message, a huge message saying to us, buyers are failing. They've tried, failed on 2 occasions to break the highs and the lows of the preceding day's range. That's very powerful stuff. So when we see this pattern off resistance with stochastic divergence, with, let's do the Fibonacci again, Fibonacci extension, absolutely, it's gone into our trap between the 1.272 and the 2, so the market is heavily overextended. Off resistance, we're then waiting for a price action reversal. We got that eventually on the 9th of April, so this week it broke the lows because our entry would have been just underneath the low of this inside bar. Stop could either be the aggressive version is just above the inside bar, but you've got to bear in mind that you may get taken out on occasions, or the conservative and the more protected view would have been just above resistance, just above this big green bar here where the market hit into the top of its channel. So we entered in, triggered, and the market has started to push lower, and Friday's close was right at the bottom, so it's looking ultra bearish with, and the reason why I like this more so than potentially some other trades is we're always needing to look at the reward to risk. What is the reward potential? If I'm prepared to risk 1% of my hard-earned cash, what is the reward potential? And for me, this really is bottom of its channel again, or at least to the previous low. So it's a good nearly 300 points for a just shy of 100-point risk. So a 3% trade, so a beautiful reward to risk there, which is another factor as to why you should be wanting to take trades. If you've got a couple of trades which are very similar technically, but your reward to risk on one is greater than the other, always go with the trades where the reward to risk is greater than the other opportunity, because we're looking to try and get as many trades that give us positive reward to risk, i.e. more reward than the risk we're prepared to accept on that trade. And if you could do that over time, you will see yourself to a nice profitability. So that's the CAD Swiss trade. So those are 3 trades that I just wanted to analyse in a little bit more detail today, purely because that's what many of you have been asking for in terms to go through some examples. But it's really nice, and I'll continue to do it, is bringing all of the technical clues together that I've been teaching you over the last few months to show you that they're arriving on a regular basis. Not every single day, not every single week, but certainly every single month there are 3 or 4 really nice opportunities in amongst some not so great opportunities for you to take. The job is to wait patiently for price to get back into that level. I think another point on this area here was price reacted to the big 8100 level. So big numbers, the 8100 where it ends in 00 or 50 are also another factor, which is what other traders will trade off as resistance levels. So big round numbers where it ends in 00 or 50 are also good levels to trade off as resistance or support. So bringing everything together, hope it's helped. Again, you're armed with the tools, you just need to apply them in real life market conditions. So as always, any questions, drop me an email, but hopefully that's confirmed further in your mind the power of the technicals. So I'll leave that with you, Have a great trading week next week, and we'll catch up very soon. All the best.